With the S&P 500, we have a nice bounce and ascent from last week's retest of last Friday's lows. However, it's a much different situation if we look at the Russell 2000. The small cap index is in a much different place than the S&P 500, having given back the bulk of its gains. And this story gets even worse if we look at growth stocks, which are making new lows in many cases. Why are growth/small caps so weak and mega caps so strong? Both of my predictions came true, as small caps are retesting lows, while the large cap and mega caps are exhibiting remarkable relative strength. I think this market bifurcation and volatility is likely to continue until the FOMC meeting on Wednesday, where we should get some clarity on the taper and rate hike timetable. According to Fed Fund Futures, odds went from expectations of between 0 to 1 hikes in 2022 to between 3 and 4 over the past couple of months. The bullish case for stocks. This is a headwind for stock prices, although it has been somewhat offset by the decline in longer-term rates, which has accompanied the firming of short-term rates. From early October to now, the yield on the 2-year went from 0.3 to 0.65, basically pricing in 1.5 more rate hikes. But the yield on the 30-year dropped from 2.15% to 1.85%. However, this is mostly a positive for mega-cap stocks, as their large balance sheets mean they are able to take advantage of the drop in long-term rates by issuing long-term bonds. Another factor offsetting this has been the beginnings of what seems like another strong earnings season. Remember that strong earnings is one of the factors that triggered the big breakout in October. As long as earnings keep expanding, we should continue to buy dips in the market. Despite the economy's challenges, earnings and margins continue trending in the right direction. I see another strong earnings season that will defy skeptics and lift stocks to new highs. But what should not be discounted is that the market has worked off excesses and overbought conditions through rotations. And some of these rotations have been brutal, as we are experiencing now. However, we've sidestepped the bulk of these losses and managed to hold on to the bulk of our gains by increasing allocation to sectors that have outperformed, like semiconductors, housing, and industrial metals. Still, even these parts of the market experience drawdowns when the market is in a risk-off mood. However, I'm confident that these circumstances are quite extreme and won't persist. The flow shows the extreme bifurcated nature of the market, with megacaps flat, while small caps are down more than 10%. This ratio has gotten way too skewed, and we will see it revert to normal, especially as an environment with such strong earnings growth favors small cap and growth stocks. Thank you for watching this video. We appreciate your continued support. For more daily news, please subscribe to our channel. This is Economics Empire, and we'll see you in the next one.